So in today's video, we are going to talk about head and shoulder chart pattern. Head and shoulder chart pattern. We are going to talk about head and shoulder chart pattern, how to identify head and shoulder chart pattern whenever you see it. So head and shoulder chart pattern is one of the most easiest chart pattern to identify. It's one of the most easiest chart pattern to identify. You see head and shoulder pattern, you see support and resistance, you see breakout structure. All those things, they are very, very easy. See, what's about trading? That is the most easiest trading pattern, or how will I put it, trading strategy that can make you money than all these price action. I'm not saying that than all these SMC, smart money concept. I'm not saying that other strategy is not bad. It's not good, Jerry. But if you just make it simple for yourself. For my own side, I make trading simple for myself. I don't need to be digging, cracking my brain, finding all this. No, if I just come into the market, I see the chart pattern I trade, I see the analysis, the strategy I use to enter. If I saw my strategy and the market give me what I want, fine. I might take 5 trades in a week. I lose 2 or I lose 1. I make the rest because I keep the trading simple for my own self and for my own side. So how to identify? How to type of head and shoulder pattern, or even 3, but I'm going to show you the 2, but the 2 is the most important one. So let's assume that. So this market starts from this zone, go up, create W pattern at the top there. They have given you resistance level here. Then come down again. This place is the neckline. We call this place neckline. Neck. Market came to the neckline. Retrace back to this shoulder zone. Then push down to come and grab liquidity somewhere here. So you see it. So as a trader that know all these chart patterns, once you came across something like this, the place you'll be paying attention is number 1. The market has given you a resistance zone here, a more pattern at this zone, a resistance zone here. Then start pushing down. You can got your entry in 2 ways in this trade. Either you got your entry from this zone, from the inner zone of this MO pattern. You got your entry from here. You put your TP at the neckline, at the next zone, which is this place. You put your TP here. If you risk, maybe you put your 20 pips or 30 pips stop loss, because that is the maximum stop loss I use. 30 pips is the maximum. Then the minimum I use is 20 pips, maximum 30 pips. So let's assume this market gives you 20 to 30 pips stop loss. Then you target the neckline, which is this zone. You could have made 1:2 plus or 1:3 or even more. It depends on how your stop loss was. Then the market push all the way down to come and grab your TP down here. Or if you miss the first entry, which is the inside of the MO pattern right here, this resistance level zone, you wait. The next place to wait to target the entry is this this shoulder zone, this shoulder zones, and this is the head right there. This is the head right there, and this is the neckline. This is the neckline. You understand? So you pay attention. When the market came down from here, let me clean this so that you will be much understandable. Once the market go up, the market go up, give you M pattern, come down, and you miss your first entry at this zone. Don't fear, don't panic, don't rush to enter the trade. Calm down. Market will still give you another opportunity. Market always creates opportunity. At least market creates opportunity more than 10 times in a day. I swear to God, if you always pay attention and have patience, market always creates opportunity more than 10 times in every single day. Then, once you miss the first entry at this zone, this inner M pattern, the inner zone, the V zone, the V pattern that was created there, the inner zone. Once you miss the entry, don't panic, don't rush to enter. Pay attention to the shoulder side, which is this first shoulder that was created here. You need to pay attention to it, because the market must surely come back there to grab what you call liquidity. You know, so you have liquidity sweep, liquidity shift, and liquidity grab. So market will come back here to grab, because of, see, this market always work with how will I put it, with people's mind. Because the market has already know that people will be waiting for him at this zone to sell. People will be waiting for him at this zone to sell. And this chart pattern always respects itself. This chart pattern now always respects itself, most especially in Euro USD, USD CAD, all these common pairs. All these common pairs like Euro USD, GBP USD, USD CAD, USD GBP USD, all those pairs that is very common. Apart from gold and silver and BTC, all those ones are very, very volatile. Because those ones, they know the respect zone. Gold feel it here. Instead of him to respect this shoulder, he will take it out, go back to the resistance zone, go back to this place, then start pushing down. This is how gold behave. So most times. But in other pair, buying order will be many buying order will be created here or left here at this left shoulder here. So people will put their buying order here. Many people buying order. If you don't know how to put buying order, I'll still show you that one later. People will put their buying order here. I'm sorry, their selling order. Sorry for the mistake. People will put their selling order here, not buying. Selling order here. So the market, because of markets cannot, like I normally told you guys, markets cannot just go down like this or go up like this. Anytime you see a candlestick or market go down like this or go up like this, it must surely come back to come and fill up this place, this gap. Market must surely go back again to fill it up and start coming down. This is how I'll start coming down properly. And start coming down properly. Once market drop like this, boom. Most especially what normally do this in the market is what we call fundamental, which is news will drop, the market will drop massively or go up massively. So that is one of the things that normally do this in the market. So once market create a big red candlestick like this, pay attention, market will retrace. Even if you don't retrace back to the normal zone here that day, if you give it gap of 1 week, 1 week is even too much. Maybe within 3 days or 4 days, market will start creating higher high, higher low, 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 higher high, until you fill up this gap, you fill up this place. Because of order was left here, money was left here, so market needed to come back and grab the money that was left here. Market needed to come back to grab those monies that was left here because of this place drop within the fundamental news. It's not, the market is not drop technical. It drops within the fundamental news. So market will always create higher high, higher lows, higher high, higher lows, higher high, higher lows. So come and fill up this gap. Once it's done filling up this gap, either it continue going back up, or you start creating lower low, lower high, lower low, lower high, lower low, lower high, and start going the main direction it was meant to go. So always pay attention. Whenever you see a blue or black candlestick drop beam or red candlestick, don't rush, because I'm telling you guys out of experience. I've been into this game for a quite long time now. So I've all this experience now. That is why it's very good to have a mentor. Because of this kind of problems, you always find yourself inside if you don't have a mentor. But if you have a mentor, you will learn from your mentor's mistake. You will learn from your mentor's mistake. Let's assume that because it happened to me steady the time where I started this industry new. So market maybe news will drop, start going down, and maybe I didn't catch. I'm not that active on the trade that time. So what do you know the next thing I will do? I enter the market within the middle of the news, or maybe the news have gone to a certain level. I just enter sell because I want to follow the news. I want to trade with the news. Once the market will give me something like maybe 20 to 30 pips and start retracing back. Before you know it, my account was wiped out. Start retracing back because I just entered the market I entered the market in middle of nowhere. No analysis, nothing. I just see the market is dropping. I don't want to miss the news. I enter camp. Market gives me cash cruise. If I trade this pattern 10 times or more, I lose 8 times. I'm telling you guys the fact. I lose 8 times. Only 2. Maybe the market will keep going down. So understand. Maybe in some certain area, I enter the market somehow quick. Market is still going down. Only 2% I win. But in 8%, the remaining 8%, the market fuck me up. I no go lie for you. I feel market feel the drop. I can't enter from this zone. Market will reach somewhere like this zone. Before I will come back again, before I will know the market will start retracing. We start retracing. If you know it, we start going back up. Wipe my account. Because in that area, to close the trade, to close the trade will be hard for me. I'll be waiting for another 15 minutes candlestick to open. Maybe that 15-minute candlestick will open and they continue to drop. In a certain area, the 15-minute candlestick will open. Push the market even up, wipe my account. Because of this kind of trade, I don't know the place to put stop loss. Because of it's a big candle. If I put my stop loss here, I'm not 100% sure. If anywhere I put my stop loss, and that kind of trader, I don't normally use to enter it with small loss size because of it's news. It's one of the, as in how will I put it, easiest way to catch money from the trade, from the market. So maybe if I put stop loss now, is all my account or 50 to 70% of my account. So I'll just leave it. Before you know it, market will wipe my account out. Well, sometimes it will drop, which is if I take 10 trade, 8 always wipe the account, then 2 hit it. So this is the common mistake some new beginners do, which is very, 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 very wrong. It's good to have a mentor so that all this mistake you will not do it. Because we now don't do it. We learn from our mistake and it takes us somehow time. Because we keep repeating it several times, until we say no. We learn from our mistakes. So let's go back to the head and shoulder pattern. So many people will put their selling order at this zone. So the market, because of market will not just be going down, it will surely come to grab liquidity to confirm this zone, this left shoulder zone. Market will surely come back up here to come and grab it. Once the market come back to this level, it will grab it, take many orders. Many people, especially like I said before, in all this normal pair, USD CAD, GBP, JPY, Euro US, all those pair that is very, very common. It's not that much volatile. The market will always respect its zone. But if now gold or silver, beauties, or I know the respect zone, you go wipe the whole account. You go wipe the whole selling order way day here. You go wipe on out or more. And so if you enter sell from here, your stop loss will be somewhere this zone, this inner pattern zone here. Your stop loss will be there. Market will come there, wipe on our stop loss, use on a create liquidity, use on a grab liquidity, use on a create strength. You go up if na gold or silver and all those volatile pair. You go up, sure. You go up to this zone. You go up to this zone. This M pattern, this resistance zone, then start dropping massively. So understand, start dropping massively. But if other normal pairs, Once they get to this zone, once they get to this left shoulder zone, they will start dropping, creating lower low, lower highs, lower low, lower high, so you hit your TP. So if you miss your entry here, you got it from here, then this is the neckline, the neck zone. Once the market will also come back to this next zone. Once market get to this shoulder zone, it will drop, take out that next zone, come back again to retest it, which is market. That is the reason why I said earlier, market creates up to 10 opportunities every single day. Apart from if the market is not ranging, it will create up to 10 opportunities. So if you miss one, calm down. If you miss two, calm down. If you miss three, calm down. You will surely get one right. Let's assume you miss this first one, you miss the second one. The third one is also waiting for you right here. We catch your third trade from here, within the neck zone, within the neckline, the neck zone. Catch your third trade, then put your SL somewhere here, then your TP, maybe a certain zone from this place, a certain zone from this place. You put your TP there. You make 1:2, 1:3, 1:4. It depends on your stop loss. So that is it, guys. So if you find this video helpful, please subscribe to our channel. Thanks.